Good morning, guys. Hope everybody had a good weekend. Today is Monday, July 1st, 2013. I wanted to let's just follow up today on our trades, the two long trades on Occidental and Intel, and then AT&T, Dominion, and Walmart. I know I definitely want to talk about Walmart. That first target on Walmart was hit yesterday at the end of the day, so we'll look at that. But real quick on Occidental, again, we talked about this last week. If you're long in here, and also, by the way, if you haven't figured out, this isn't Todd, this is Craig. Todd's still out. Todd is still out of the office until Friday. So again, but we talked last week about Occidental being long, getting long in here, right into 38. As this market pulled back to some deeper support, running to 38, or you could have waited. Market put it in an inside vertical bar right in here, and you could have actually gotten long on the open of the very next day once we pretty much gapped up above the high of that inside vertical bar. And if so, we were using the ATR, using half of the range of the ATR, 90 cents or so below this low, right here, 87.51. So your stop on the trade, your initial stop loss, was it 86.60? Was the number on that? So we're fine. Just get your stop right there at 86.60. Your first target, if you did not get filled at the high of the day, if you were front running this 91.60, maybe looking for 91.50, and you didn't. If you got filled, if you're just in front of that a little bit and you got filled, great. You got filled at the high. If not, you're looking for maybe 91.50 for that first target. Okay. 91.50 for the first target. And then your second target, remember I talked about how this ledge may end up, it could trip things up for profit targets. So technically, if you go halfway between 50% and the high for that second target, it's going to be just above that. So you can, take, like what you can do is use the high, or look in here and see where the most points were hit, or even the high of this extended range vertical bar, and go half a range from below that, or quarter range. So 45 cents, 50 cents below the high of this bar would make a decent target. That would put you somewhere right in there. So just inside just inside this, I can't draw a horizontal line, just inside that line. So it'd be right around 92, 90 or 92.85 maybe for that target. Okay, so still holding on to this trade. For the market's catching a little bit in here, trying to push higher towards our target there. So that's Occidental. Let's look at Intel. Same thing, very similar trade setup from last week. Again, it could either taken out long right in here at 23.75-ish, right on the 38, or once the market gapped up, pulled back a little bit, anywhere in here you could have gotten long. This market isn't moving as much. You've got your stop. It's actually a lower risk trade. You've got an average to range of 52, so you divide that by 2, 26 cents below this. So you get your stop in here at 39, 29, 19, around 23.15. I think I said that yesterday or last week. 23.15 on the stop. Okay. And then obviously your first target. Now I like to use the fibs. If you want to use the entry back up 50% of the entry, but I like to use the fibs. So I'd be looking at this 24.70 or 24.65, 24.65 on the target, 24.65 for that PO, that first PO. Okay, and then your second PO right around right around in here, just inside these highs, and that's about 50% from uh, from your first target back up to the high. So those trades are still working, still hanging in there. And then the other three trades that we talked about, the short trades, AT&T. Again, I mentioned if you got short that day, it worked out. It's starting to work out. You could have been short anywhere in here on this day. We got new lows, okay, in here. You got an active high right in here, okay. If still short, just got to give the market some time. Remember, we're trading off of daily charts. Just got to give it some time. But you got a target in here. You could draw your fibs up on there. Like this, and if you're going to use that 50% fibs, 3504, maybe go to 3510 or something like that for the target. Okay, so you go to 3510 for that first target, and let me see, 3510. Oh, this is easy. 3460 for the second target. Okay, so I'd be looking for 3510 and 3460 for your first and second targets in here. Your stop on the trade, 3510 and 3460. Oh, it changed colors on me. I'm not sure how that happened. And your stop in the trade, you got an active high right in here. Oh, look, it changed colors again. Okay, I don't know what's going on here. Our pens changed colors. So we've got the active high right in here. You can go half a range above that. You're half a range against 62. So you should have your stop about 30 cents above this active high, or even the 50% fibs. Worst case scenario, you could go right around 3701 or 3705, somewhere in here for your stop. That's 30 cents above this upper moving average. That'd be the worst case scenario. Otherwise, you'd be fine. You might be fine with your stop. That'd probably be best is to keep your stop back in here, because you might want to scale in. This is a second retrace. It didn't pull back to moving averages yet. I mean, it did over here, but it did not after this new low. So the market could end up pulling back a little bit further before continuing lower. So 3705 on the stop. Okay, that gets you like a half a range above this upper MA. Okay, so and if you missed out on the short, I mean, you could have actually, hopefully you watched the video. You could have actually still taken the short in here at the high, as soon as the market started to pull back a little bit. Even today, you still could have entered short. Now it's a little too late. It's pulled back a little bit. But if you watched the video on Friday, I talked about that. I mean, you could still, as long as the target's not hit, the trade's still valid. So, all right. And let's take a real quick look at Dominion Resources. Now this was pulling back a little bit more, but I mean, you can see the selling pressure trying to, the bears trying to come in, like even today. The markets are even up today, and you can see Dominion in here is catching, they're coming in on that offer. Got to gap up, but then it just sold off right away. So if you missed out on this yesterday, I mean, you've still got a valid entry in here. Okay, right in here right now at the market, I mean, it's still a valid entry. So I mean, technically, if you're not in the trade yet, you could take it right now. 56.70, 56.68. Your first target right around this 55.60 level. Okay, second target about 50% from there, right around 54.80 or so. Okay. All right, and then Walmart. Real quick look at Walmart here. This trade worked out. The first target was hit on this trade. Here's Walmart, and I'll switch to a daily chart so you can see it. But on Friday, I introduced Walmart, and we were talking about it, and I said you can get in right at Walmart at 75.40. And I know even later that day, I'll look at a 3-minute chart, it went up a little bit more. So you might actually have a better price. You might actually have a better price than the 75.40. But if you were able to get short at 75.40, you know, when we throw up the 50% fibs on this for that first target from the low up to this pivot high, you're looking at 74.55 ish for that first target, or 74 even 60. So you should have, and we hit that mark on that first day. So let me switch to a 3-minute chart, because I did the, yeah, okay, this I've got an issues with, I don't know what's going on. Got issues with my software this morning. Got to get that fixed. So yesterday, right in here, or Friday, I mean, right in here is when I recorded the video, somewhere right in this area. So, you know, like I said, here's 75.40. Okay, you may have actually gotten short in here by the time the video was produced, and if you watched the video when it first came out, you may have gotten short in here, and the target was hit on that. It did sell off at the end of the day, so target was hit on that first target. So, and then today, the market's continuing to, it did gap up a little bit. And it's just kind of trading sideways in here. This is today's price action. I lost my Keltners. Something's going on with my software, so I'll get that fixed by tomorrow. So you can see we are getting that follow through. Let's go back to a daily chart. You see now it's totally gone. So the targets were hit on that, the first target. Okay, now the market's catching a little bit in here. We'll see what happens. I mean, as far as getting short, again, the first target was hit. So if you missed it, okay, the trades, you're not looking to trade it anymore. And if you're still in it, now what you're looking for is you got half of an array. You know, if you're still in with a portion of the trade, what you're looking for now is you got a half a range right in here at $1.12. Okay, so you can about 56 cents above this pivot high right in here. Okay, so that pivot high is 76.11, so you're looking at 76.70 on a stop on a remaining portion of the trade. Okay, so and if we get some more follow through, then that target will be hit. So, but we did get the first target on that at the end of the day when the market sold off on Walmart. So, all right, guys, tomorrow I'll try and introduce another trading concept, and hope that helps, and we'll see you guys. We'll see you guys in the morning. Thanks. Bye.